everyone, Boyne here with BK Securities. I wanted to do a quick video today on how you can set your stop losses and profit targets when you're trading securities. Something to keep in mind is that the strategy you'll learn here can be used across any security, whether you're trading, stocks or equities, crypto, options, forex, anything that you're looking to trade. You can use the same strategy universally across all securities. And so in particular today we're going to be looking at stock Apple, right? Ticker symbol AAPL. And I just kind of want to give you an idea of how I determine my stop losses and profit targets. Okay. Now this also something to note is that no matter what time frame you're looking at, whether it's daily candles or 30-minute candles, for example, or 5-minute candles, it doesn't really matter. This applies unanimously throughout all time frames. Okay, so just for simplicity's sake, we're going to look at daily candles here. Okay, so each one of these candles represents 1 day of price action. For me, most of the time I will do 1 to 2 RR ratio, meaning that for every dollar that I risk, ideally I would get $2 back. However, sometimes, I can only get 50 cents on a dollar, right? So a half an hour. But typically, I would usually always try and get 2R for every 1R that I risk, okay? And so the important part about creating your stop losses here is that it also at the same time tells you how many shares you should be buying or selling, right? So if we're looking at the chart of Apple here, so my first thing when I am looking at creating stop losses is to figure out what is my 1R, right? What is my risk to reward ratio according to my trading plan, right? So let's say, for example, I have an account with $10,000, right, of starting capital. I want to only risk 1% per trade, because that would then mean that I could be wrong 100 trades in a row. Now this is very unlikely for people that know anything. Even if you went with a 50-50 chance, it's very unlikely to get 100 trades go wrong in a row and for you to deplete your capital. This is exactly why we use the 1% rule, because it's an ultra safe way to trade, right? With the 1%, what that means is that on every single trade, you would be risking $100 as your max loss. And so how do we get the $100 for your max loss? We took $10,000, right, which is your balance, let's say, in your account, and we multiplied it with 0.01, which represents the 1%, right? So this means that on any given trade, the amount of shares, in this case of Apple stock, that I buy and the stop loss that I set should not let me lose at worst case scenario $100 as a max loss. Now I might choose to cut my trade off earlier. I might shift my stop loss to make it a risk-free trade, but these are all the things that I'll go through in my courses. For now, I just wanted to show you the basics of how you should be planning and setting your stop loss and profit target. With that being said, now we know that $100, right, is our max loss that we want to incur on this on any given trade. Okay, so then how does this help us out? So since our max loss is $100, if you look at the Apple stock, it's kind of sitting at a support level right now. Okay, and we bounced off this support level essentially 3 times here. Okay, now this is a support, as you know from my courses, because this is an SR flip, because essentially this line used to be resistance. As you can see, when the price rallied from down here, it hit this, resisted, came up again, hit it, resisted, and then finally broke through it, right? So naturally, when this breakout happens, the price will come back and retest that same level, but now instead of it being resistance like here, now it is support here. Okay, again, you can access all this in detail in my free course. I'll leave the link to it below. The idea here is that, let's say I'm entering Apple here and I want to enter right now, okay, and I want to enter a trade, and we're thinking that Apple will go up. So what do we do now? Obviously, we're going to place a buy order, right, in order to capture the bullish move. But how do we automate that order, not having to watch it every single time, in front of the screen, we can automate our order, and that automatically gets us out at this $100 maximum loss. Or if we hit our profit target, it will automatically get us out of the trade and cancel all orders, right? So knowing that we have $100 max loss, okay, the critical thing that's, kind of next is figuring out how many shares should I buy and where do I place my stop loss in order for this to be in effect, right? So the way I'm going to do that, the first thing that you need to do is there's an indicator, and you can see my cursor up here. You need to add this indicator called average true range. Okay, so if I was to add that, you can just go in there in the search, type in average true, right? And there we go, it pops up, average true range. Okay, now pick the one under technicals. Okay, don't pick what's published by random people, pick the one that's done by TradingView. So if I click on this particular thing, it's going to pop up an indicator down here. I usually, minimize that all the way down. Okay, and there's a few things that you need to know about this indicator. Okay, so the average true range indicator measures the average size of each candle, right? So from open to close, essentially, or from the low to high, right? And then what it does, in this case, we have ATR of 14, so it will take the last 14 candles, right, sum it all up and divide it by 14, and it will give us the average movement of that candle. And when you highlight here, okay, on any given candle, you see how you can basically, you see my cursor here, right? So as I highlight on the ATR here, you can see the value of ATR here change, right? So look, so when I'm looking right now, this last candle was $5.25. Next one, 5.39, 5.32, 5.13, right? So why is this important? This tells us that this next candle after our entry has a chance of moving $5.25 within a day here, because we're looking at daily candles, right? If you quickly switch to 30-minute candles, okay, you can see here that the ATR will be smaller, will be different, right? Because it's a smaller time frame. There's a lot more candles, right? So they're not as big as daily candles in terms of the movement of dollars, right? So if I look at this last candle here, if I highlight this last candle, you can see that ATR is only 1.29 on the lower left of the screen here, right? So down here. So if you look, it's 1.29, right? So depending on what time frame you're trading on, it's going to determine how big of a stop loss you need to have and how many shares you need to buy to stay within your max loss and achieve maximum profits, right? So let's go back to the daily candles here. And so when I highlight this candle here, you'll notice that we had, right, ATR of 5.25, right? So when I draw out my position hypothetically here, let's say I entered at the top of this candle here. The candle, I need to protect maximum of 5.25, right? So I'm going to drag this thing up to, let's call it 5.21 here. And you can see that my stop loss should be there, okay? So it should be around that 5.25 number, because that's the length the next candle could likely take, because that's the average of the last 14, right? So why do I put it there? Well, what happens if a candle, opens and then goes down straight from here, right? So I wanted to hopefully, if there's any chance of that after that down candle, we getting a bullish candle, which then takes us up to our profit zone, right? I don't want to get stomped out on a first candle, right? So I usually make my stop loss at least one ATR. Okay, if I want to be safe, okay, and something that I usually do, what I will do then is I will say, okay, ATR is 5.25. I will add an additional buffer to that to be extra safe, right? So I'm going to usually multiply that number by 1.5. Okay, you can either do just the ATR, right, with no buffer, so in this case 5.25, or you can do what I do, which is add a buffer of 1.5 to be safe, which means that my new ATR here, okay, is 5.25 times 1.5. That means the distance that I need to protect myself is approximately 7.9. Okay. And so now I'm going to adjust my stop loss. So this 521 number is going to need to sit down at that 790. Okay, let's put it there. So this is now my stop loss area. So there's usually, it's very unlikely for the next candle to come all the way down, clear the bottom of this one, clear the bottom of this one, and go past all the way down here with just one candle, right? Before it has a chance on if there is a red candle next, before there's a chance for it to reverse and go up towards our profit target, right? Now, what happens if there is a candle that's, lower in this line? I'm okay with that, because if there's a candle like that big, so it would be something like one of these red candles here that breaks below that, I don't want to be in that trade anyways, right? Because then chances are it's probably going to go down to 206.80 or even lower to like 193, 80. So I don't want to be in that trade anymore. But I set my stop loss there because it's a good risk, because we see that we're testing the previous resistance, right? And then there's a likely bounce that we could see on Apple, right? Now, if that doesn't happen for whatever reason, right, that's just probabilities. If it doesn't happen and if it goes lower, we have a little bit of room here for the stock potentially to reverse up and go up. Or if it passes here and hits this stop loss, you'll see it highlighted in red to 211.08. If it goes below that, I'm out of this trade and I've only lost $100 even if Apple just continues to go down. Okay, so I've capped my losses. Okay, now the next thing that we figure out is, okay, well, now we know where our distance to our stop loss is, right? So now the next thing that we want to figure out, okay, how many shares do I need to buy in order to stay within this $100? Okay, so if I know that my adjusted ATR is 790, I'm going to go down here and I'm going to say, hey, my maximum loss is $100 per trade, right? Based on my 1% rule. So I'm going to divide that, okay, by 7.90, right? Because that's the maximum loss distance. This essentially tells me that I can buy 13 shares of Apple and stay within my stop loss. So essentially, when I execute my order, buy 13 shares, and I'm going to attach something called a bracket order, which you'll learn in my courses how to do this, right? But you would attach a bracket order. The bracket order is going to ask you for where do you want your profit target to be and where do you want your stop loss to be. So I want my stop loss to be at this 211.08, right, number, like somewhere right there. Okay, I want my stop loss to be at 211.08. And now let's talk about where to set your profit taker or your profit target, right? So with Apple here, again, you'll find in my courses all sorts of strategies on how to determine this type of stuff. But let's say I wanted to be, let's say I thought that, hey, Apple is going to come and it's going to, hit this gap here. Okay, it's going to fill this hole or this gap that we have between the candles, okay, at some point. And so what that does is it tells us that I'm risking $7.86 per share, right? And my target profit is at, you can see on the right there on the y-axis, the 234.72, right? Highlighted in green. So I'll put my cursor on somewhere around there. Okay, if the price hits that 234.72, I want it automatically to exit me out of the trade, so I can it takes my profit, right? And then it automatically cancels the stop loss order as well, right? So both of these orders are active until one of them pans out, and then they both cancel out. What this now means is that I have a potential gain of $15.78 per share of Apple. And we know that we bought 13 shares, right? Because our max loss is our first concern, right? Then the profit taker, okay? So with that being said, we're risking 3.59% in order to get 7.21%. So you can see that when you take the target profit, the 1578, and divide it by our stop loss distance there, we get an RR ratio of 2.01. Okay, so basically 2. So for every dollar that you're risking, you're getting $2 back if you're right. Okay, so what that would mean then is that if we're risking $100, we're getting $200 as profit on top of our, $100 that we get back that we risked if Apple moves to this 234.72. Okay, so then in your broker platform, you would enter, you would go entry price, whatever price of Apple is at this moment. In this case, it was 217.96. We can see it on the right here. You would enter a stop loss at 211.08, and you would enter a profit taker at 234.72, and you would buy 13 shares. Okay, and then you would click submit, and you will see 3 orders pop up kind of tied together, which means that if Apple, no matter what happens with Apple, it's either going to move up and it's going to hit your profit target, and then you'll just see profit in your trading account, and this thing will be canceled out, the stop loss order, or we're going to be wrong and Apple's going to go down. It's going to hit our stop loss target at 211.08, and we're going to realize a loss in our brokerage account, and then this target profit order will cancel automatically. Okay, so this is how you automate orders when you're trading any type of securities, and this is how I determine, how to set up my stop loss and profit target. Okay, now I'm going to leave the links to free trading course that I have that you can take, which goes over a lot of the stuff in greater detail. Also, I'm going to leave a link to this particular platform that I use. It's called TradingView. I'm going to leave it the link below, so you can also check that out and click on a link and sign up if you want to. Okay, hopefully this was helpful. If you enjoyed it, like, follow, comment, and then we'll go from there. All right, appreciate it. Have a good one.